In today's financial landscape, having a good credit score is more important than ever. It serves as a key indicator of your financial health, influencing everything from loan approvals to interest rates on mortgages and credit cards. A strong credit score can save you thousands of dollars over time, while a poor score can limit your options and lead to higher costs. In this video, we will delve into the essential steps you can take to fix a bad credit score and improve your financial standing. You'll learn practical strategies such as checking your credit report for errors, understanding the impact of payment history, and how to manage your credit utilization effectively. We'll also discuss the importance of building a positive credit history over time. The best part? These strategies are not only effective but also easy to implement, making it accessible for anyone looking to enhance their credit score. So, whether you're starting from scratch or trying to recover from past mistakes, stick around to discover how you can take control of your financial future. Understanding credit scores. A credit score is a numerical representation of your creditworthiness, typically ranging from 300 to 850. This score is crucial as it helps lenders assess the risk of lending you money. The higher your score, the more favorable your financial options become. Several factors influence your credit score, with payment history being the most significant. Consistently making on-time payments can boost your score, while missed or late payments can severely damage it. Other factors include credit utilization, length of credit history, types of credit accounts, and recent credit inquiries. Your credit score plays a vital role in major financial decisions. For instance, when applying for loans or mortgages, lenders use your score to determine whether to approve your application and what interest rates to offer. A higher credit score can lead to lower interest rates, saving you money over the life of a loan. Conversely, a lower score may result in higher rates or even denial of credit. Understanding your credit score is essential for making informed financial choices and achieving your financial goals. One of the first steps in improving your credit score is to check your credit report. You can access your free credit reports once a year from annualcreditreport.com, a service authorized by federal law. Simply visit the website, fill out a form with your personal information, and select the credit bureaus you want to receive reports from. Once you have your reports, take the time to review them carefully. It's crucial to check for errors or inaccuracies, as even small mistakes can negatively impact your credit score. Look for incorrect personal information, accounts that don't belong to you, or late payments that were made on time. If you find any discrepancies, you can dispute them with the credit bureau to have them corrected. Understanding the components of your credit report is equally important. Familiarize yourself with sections like payment history, credit utilization, and account types. This knowledge will empower you to make informed decisions and take actionable steps toward improving your credit health. Dispute errors. If you find inaccuracies in your credit report, it's essential to dispute them promptly to protect your credit score. The first step is to file a dispute with the credit bureau that provided the report. You can do this online, by mail, or over the phone. When filing online, visit the bureau's website and follow their specific instructions for submitting a dispute. If you choose to mail your dispute, include a detailed explanation of the error along with your personal information and a copy of your credit report highlighting the inaccuracies. Gathering supporting documentation is crucial for a successful dispute. Collect any relevant documents, such as payment receipts, account statements, or correspondence with creditors that support your claim. Attach these documents to your dispute to strengthen your case. After submitting your dispute, it's important to follow up until the issue is resolved. Credit bureaus typically have 30 days to investigate, but don't hesitate to check in if you haven't received updates. Staying proactive ensures that inaccuracies are corrected, ultimately helping you improve your credit score. Pay bills on time. Timely bill payments are one of the most significant factors influencing your credit score, making it essential to prioritize them. Late payments can have a detrimental impact, potentially dropping your score by several points and remaining on your credit report for up to 7 years. To avoid this, consider setting up automatic payments for recurring bills, such as utilities and credit cards. This ensures that you never miss a due date. Alternatively, you can set reminders on your phone or calendar to alert you a few days before payments are due. It's also important to prioritize your bills based on their impact on your credit score. Focus on paying credit card bills and loans first, as these have a direct effect on your credit history. If you find yourself struggling to keep up, consider creating a budget to manage your expenses better. By maintaining a positive payment history, you not only improve your credit score but also enhance your overall financial health, paving the way for better loan terms and interest rates in the future. Reduce credit card balances. Lowering your credit card balances is a powerful way to boost your credit score, primarily by improving your credit utilization ratio. This ratio measures how much credit you're using compared to your total available credit. To maintain a healthy score, aim to keep your credit utilization below 30%. This means if you have a credit limit of $10,000, try to keep your balance under $3,000. One effective strategy is to focus on paying down high-interest credit cards first. By tackling these debts, you not only reduce your overall balance but also save money on interest payments over time. Consider creating a repayment plan that allocates extra funds to these cards while making minimum payments on others. Additionally, making multiple payments throughout the month can significantly help in managing your balances. This approach keeps your utilization low and can prevent you from reaching your credit limit. By consistently reducing your credit card balances, you'll not only improve your credit score but also enhance your financial stability, making it easier to secure loans and favorable interest rates in the future. Avoid new hard inquiries. Hard inquiries occur when a lender checks your credit report as part of the decision-making process for a new credit application. Each hard inquiry can cause a slight dip in your credit score, typically lasting for about a year. While one or two inquiries may not significantly impact your score, multiple hard inquiries within a short period can raise red flags for lenders and suggest that you may be a higher risk. To minimize hard inquiries, it's essential to avoid applying for multiple credit accounts at once. Each application triggers a hard inquiry, which can accumulate quickly and negatively affect your score. Instead, take your time and focus on one application at a time. Before applying for new credit, do your research. Understand the terms, interest rates, and fees associated with the credit product you're considering. This not only helps you make informed decisions but also reduces the likelihood of applying for credit that may not be suitable for your financial situation. By being strategic about your credit applications, you can protect your credit score and maintain a healthier financial profile. Consider credit counseling. If you find yourself overwhelmed by debt or struggling to improve your credit score, seeking professional credit counseling can be a valuable option. Credit counseling involves working with trained professionals who can help you understand your financial situation, create a budget, and develop a plan to manage your debts effectively. These counselors can provide personalized advice tailored to your unique circumstances, helping you regain control of your finances. When looking for credit counseling services, it's essential to choose certified non-profit agencies. These organizations are often more trustworthy and focused on helping you rather than making a profit. They can offer services such as debt management plans, financial education, and assistance with negotiating lower interest rates with creditors. Exploring credit counseling can be particularly beneficial if you feel overwhelmed by your financial obligations. By taking this step, you can gain clarity and support, making it easier to navigate your path toward financial stability. Remember, seeking help is a proactive move that can lead to improved credit health and a brighter financial future. In this video, we've covered essential steps to effectively improve a bad credit score. We discussed the importance of checking your credit report for errors, disputing inaccuracies, and making timely bill payments. Additionally, we highlighted the benefits of reducing credit card balances and avoiding new hard inquiries. Each of these actions plays a crucial role in enhancing your financial health and building a stronger credit profile. Taking action is vital. The sooner you start implementing these strategies, the quicker you can see improvements in your credit score. Remember, a better credit score opens doors to lower interest rates, better loan terms, and greater financial opportunities. Together, we can take steps toward a healthier financial future. Thank you for watching, and we look forward to seeing you in our next video.